Glad to know you're still with us. On top business headlines today, Nigeria's state-owned oil company, the Nigerian National Petroleum Company, NNPC, is considering securing a new $2 billion loan using crude oil prepayment as collateral. Also, the landing cost of petrol in Nigeria has risen to 978 naira per litre. Bolade Agboola, investment research analyst at Chapel Hill Denham Securities, joins me for this. Thank you, Bolade, for joining me today.
Thank you. Good morning. Thank you for having me.
Great. When we look at the market rate of 1,500 naira per dollar, the landing cost of petrol has somewhat increased to 978 naira per litre from 720 naira per litre in October 2023. Talk to us about the factors driving this surge.
Yeah, so to me, there are two main factors that are driving this surge. First is global oil prices. And if we look at it, average in Q2 2024, it's about $85 to a barrel. And if we compare it with last year's average prices, and we'll be looking at $78 to a barrel. So we've seen like a 9% increase in the price of, crude oil, which is a major raw material for petroleum products. Another thing we'll be looking at as a driver for this surge is the volatility in the naira. We've seen the naira depreciate. If you look at it on a year-on-year basis, it's depreciated at about 65%. If you look at it in Q2 2024 to Q2 2023, we've seen a 65% depreciation. On the parallel market, we also see it as about 45% depreciation. So these two things affect the landing costs of petroleum products. PMS now we are talking about in particular. So I believe that these are the drivers of the surge that we are seeing.
And is that also why queues are returning to filling stations across the country?
We can attribute it to that, given that now that the costs are higher, marketers will need much more money to be able to take the amount that they would usually take normally. And another thing we will also look at is NNPC's response to why there's been fuel scarcity and long queues at different filling stations. And they mentioned that the weather conditions, that is the flooding, has caused some supply chain disruptions for them, which I believe is also something that is the reason for the increase in the queues at different filling stations currently.
Well, just being curious, if there was no form of subsidy in place, how much would Nigerians pay per litre of petrol? Because if the landing cost is over 900 naira and Nigerians are paying, well, in some places now they say they are paying about 700 naira per litre, but I mean, officially we should be around over 600, maximum of 670 thereabout. So, I mean, talk to us. How much should Nigerians be paying ordinarily if there was no form of subsidy in place?
Given the macroeconomic conditions and also the fact that, a lot of things have happened, like I mentioned, the rise in crude oil per barrel also, I'm using the old PPRA pricing template, and we estimate that the sale of petrol at different pump stations will be at about 1,100 to 1,200 per litre. That's like an estimate.
Right. Well, a lot of Nigerians are interested in transparency and they sort of want to know, I mean, is it even known? Do we know what percentage of this cost Nigeria was sort of paying before subsidy was removed and how much it may be paying now that we have what many analysts call, partial subsidy? Do we even have all that figure, something that points to or helps us understand, what's happening actually in Nigeria's, oil and gas sector?
Okay, so my conversation on this will majorly be more of an estimate. And I estimate that prior to the removal of fuel subsidy, the government was doing about 40% of the cost, given the price as the landing cost as at that time, and also the price we're paying at the pump station, at the filling station rather. And after the removal of subsidy, we estimate it using the 720 per litre as the landing cost, and we paying about 600 naira per litre. So we estimate that after the removal of subsidy by the president, it was reduced to 20% subsidy. So we are right, as a partial subsidy, the 20%. However, given the current conditions, naira has depreciated significantly. We're at about 1.5 naira to a dollar, and also looking at other factors like different costs that would have been impacted. I believe that we are already back to the 40% that the government has been doing prior to the removal of subsidy.
And maybe that's what accounted for the 5.4 trillion naira we saw in that leaked document. Because when you consider that to what was spent in the previous year was over a bit over 3 trillion naira. And then if you say you've removed subsidy and then you're projecting 5.4 trillion for 2024, then that tells us that we're probably back to where we were coming from. Well, we hope that someday the government will be able to tell us, in black and white what's happening. But of course, we do not necessarily need them to tell us because we can see the handwriting on the wall. Anyway, away from that, the landing cost of 978 naira does not actually include Nigerian Ports Authority charges, vessel charges, NIMASA charges, and other, distribution costs. And then sadly, some of these are charged in dollars. And we have some persons who are calling for the de-dollarization of that particular segment of the market. What's your take on this?
All right. From my knowledge and how the PPRA pricing template is, most of these charges that you mentioned are not in dollars, they are in naira per liter. And the charges or the expenses that are in dollars are usually the costs of the petroleum product, freight costs, and which is not surprising given the fact that we are not the one producing it, and we have people that they sell to us, and these people are foreign companies, so it is expected that that they would charge whatever charges in dollars. So from my own knowledge, I don't think these other charges are in dollars, right? And if it's so, I don't think that that's the best. That's the best for us as an economy, given the challenges we are facing in that aspect, and the fact that inflation in the country is like at an all-time high. So I don't think it's the best for me, but I still stand on the fact that I don't think that those charges are in dollars.
All right, away from that, let's turn our attention to the second story. NNPC is reportedly mulling a $2 billion crude-backed loan. What's your reading of this?
I believe there are two sides to a thing. It's good in terms of improved dollar inflows, which is what we need currently in terms of FX liquidity. However, there's the other side, which is the fact that there's a strain on what we are able to generate from oil revenues. So it's a two-side kind of a situation, and it's one where we will eventually overtake the other at the end, but there are just two sides to it.
Well, there are two sides to it, but which is the less risky side? Maybe we should start from there. Which is the less risky side?
Okay, so everything depends on what is currently going on in the economy, because it is not a bad situation to be able to use your natural resources as a form of leverage, right? However, it is a problem if you have now taking so much of your natural resources as a leverage, and then you are not able to pay back, and then the money you get, like maybe the loan they get, they don't use it for productive measures, productive things that will help in improving the productivity of the economy. And then we now still have to pay that loan in the long term. So it's just like taking from your future and not even investing in your future at all. So it's very risky if the loan is not put into productive use, and the fact that we are not able to, and then it just improves our exposure to high leverage, high debt as an economy. So like I said, it's a two-side thing, and it just depends on how the money or the funds that is gotten is put into good use.
I like what you said last, but then shouldn't we also be worried about debt sustainability? Isn't that a concern for you?
Of course it is a concern. Of course it is a concern.
All right, well, talking about the same model, it's been condemned by analysts, industry players, and even AFDB president. They say such loans complicate debt resolution and also compromise, a country's future growth. But what do you actually have a challenge with? I mean, I just wanted to be clear here. Do you have a challenge with resource-backed loans in themselves, or the concern that, these assets are actually not priced appropriately? Because there is also that concern that how do you actually price it appropriately, especially when it's a long-term thing?
Yes, so like I mentioned earlier, the resource-backed loan is not the problem itself, is now the structure of the deal, if it is priced appropriately, because if it is priced appropriately, both parties will be able to benefit and it will favor both parties. But if it is not priced appropriately, in that way we are losing. One person will definitely take the shortfall of, if it is not priced appropriately. So I don't have a challenge with a resource-backed loan, but my challenge is if the assets or the structure of the deal is not priced appropriately.
Well, talking about that, we also know that the $3.3 billion that was, gotten earlier, of course, that is still in the pipeline, about that particular one. We didn't have the numbers, the figures. We probably didn't even know so much about it until a particular media house, came out with some numbers, and it was after that media house came out with that number that we then saw NNPC, also telling us and confirming some of those numbers. Why do we continue doing this? I mean, isn't that a problem? Isn't that something we need to solve in the industry?
It is a major challenge. Transparency is a major challenge, and until that is solved, we really cannot say this is where we are and what can we do to take us to the place we want to be. So it's a major challenge, like you rightly said.
Well, still on that, NNPC Chief Mele Kyari actually talked about this, saying that the company wanted a loan against 30,000 to 35,000 barrels per day of crude production. Remember, the other one is 90,000, barrels per day. But then he didn't tell us how much money is being sought. And this is all the details we know about this deal. In a situation like this, how then can, maybe analysts and, policy people, not necessarily policy people now, how can analysts and people like you, in the industry know if this is a good deal for us or not?
So there's a lot that, goes into the deal, and I believe the best way, there are parameters that, one will look at to be able to say that, oh, this is the best deal or not. One of these is tenure, right? We need to know the tenure. We need to know the prices. So we need to know the structure of the deal in general. If the structure of the deal is in the sense that, okay, we are going to sell this amount and give you the proceeds, or if we are just going to hand over the oil barrels to you. So those things are not clear. We need to know the tenure. We need to know the price. Like, okay, what is the projection of the price that, if in terms of it's the use of proceeds, what are we going to give? What are we going to give this our supplier or this our other party rather? So it's just a lot of things going into, and besides, we still have backlogs, like you mentioned earlier. We still have backlogs of deals like this that have been done in the past. So how much of our daily production is even remaining for us to be able to estimate, oh, if this is a good deal or not. So there are a lot of things that go into the deal, and the fact that there's not been some transparency, or we are not really clear about the structure, one cannot really say how it's going to affect us, and we cannot say whether it's a good or a bad deal.
Well, is this really a good thing? Aren't there other alternatives to, resource-backed loans? Or is it that we've exhausted all the other options and we just have to do this?
That I cannot really speak on that, and it's definitely the authorities that have more knowledge on that. And another thing I would like to add to that is the fact that in terms of other places where we can get dollar-denominated inflows is the Eurobond, but we know that in that space there's been high the costs to borrow in the foreign space is much higher, given the high inflation and higher interest rates globally. So that would definitely affect the cost of borrowings, rather, especially for the Eurobond. So I think that is why the government is shying away from the Eurobonds space. So
okay. Yeah, thank you. Finally now, just before we close, what are your thoughts about, increasing oil production or crude oil production in Nigeria? What needs to be done?
I didn't quite get your question.
Okay, I'm saying that to increase crude oil production in Nigeria, what do we need to do? Because if we're not increasing production, we have a budget estimate that we have not even met. And at the same time, we're also having this, loans that are tied to or backed by our crude oil. That's going to be a problem for us. So what's your thought on deepening or improving crude oil production?
In terms of improving crude oil production, I think one aspect we'll be looking at most is in terms of infrastructure. There's a need to improve the infrastructure in the oil and gas sector. We saw that the president mentioned some executive orders, which I believe are very vital to investments in that sector. So policies, there's a need for policies that would encourage investors in the sector, as we've seen in the executive orders. And that's one of the challenges we are facing, that there are some others that have gone out, but have they been implemented? Are they implemented immediately? Because if they are not implemented, it's just like you're just saying things and no action has been done. We also highlight that there are some pipeline transactions rather in the pipeline which could, be of positive to the oil and gas industry, which we believe that the president and the minister of the sector should be able to, after doing their due diligence, of course, should be able to sign out so that these indigenous companies can take up these assets. Given the fact that they've taken a lot of debt, or they have invested a lot into buying these assets, they will definitely put much more effort to make sure that these assets return on their investment. And returning on their investment means that much more increased production. So, making sure that these transactions in pipeline, such as the Seplat MPNU deal and the Oando deal, go through is another thing that will be vital for the oil and gas sector.
Absolutely. Thank you so much, Bolade Agboola, investment research analyst, Chapel Hill Denham. Thank you for your time on the show today.
Thank you very much.